Let's move on to Shake Shack. Yesterday, there was a headline I saw, and the headline was, "Will Shake Shack's spectacular 2019 continue with its third quarter report?" And the answer appears to be a resounding no, because Shake Shack down 20% today. Same-store sales in the third quarter came in at 2%. That's only 0.5% lower than what was expected. But I think, to go back to the headline, it actually has been a very good year for this stock. And Shake Shack has sort of moved into this category as a business. Maybe we're not expecting perfect results for them, but in this environment, if they're going to miss, then we're taking some money off the table.
Yeah, a lot of things to say about this one. One, to focus on that headline as to what was spectacular. Was it Shake Shack's business year or the stock year? And the stock year had been spectacular, and one wonders why to that degree. And if you look at a chart of Shake Shack, it's one of the companies that I like to refer to as the stock having visited lots of different interesting places. And it skyrocketed after its IPO, got up to, I don't know,
90. It was north of 90.
Came down to 30 after that, back up to, close to 90 again. And now it's at 60 some. And if you look at the actual operations, it's a fairly smooth growth story, which just doesn't have quite the highs and lows that the chart would suggest. And, profits it's trading at 100 times earnings. So its same-store sales are 2%. Yes, it can open a bunch of stores, but why are people paying 100 times earnings for this company? I think they're asking themselves that, based on the 20% drop in the stock today.
And even with the drop that we're seeing today, the stock is still up around 50% year to date. So it is interesting, though, because you're right. This is not a business that has been what I consider to be overly aggressive with their expansion plans. They've been pretty steady with it. So I'm not really sure why they are afforded the multiple they're afforded. I assume at least part of it has to do with a decent concentration of its locations in New York City.
Possibly having captured, because of that, some of the financial media's attention. I mean, the amount of mentions that Shake Shack gets on something like CNBC in proportion to the size of its business is fairly odd. But it's a good growth story. It is actually profitable, as it should be, given its size and the business that it's in. But one of the problems with this report was it referenced that it is moving from using a number of different delivery services to only using Grubhub, and that is going to impact sales to the downside, which makes one wonder just how much is Grubhub offering Shake Shack to be the sole provider of delivery services for Shake Shack? How much is that worth it to Shake Shack to sacrifice some additional sales, because they must be getting a pretty sweet deal from Grubhub? And if you look at Grubhub's stock price, you'll see that it must have gotten into a lot of bad deals, because it's going nowhere.
Yeah, I think this is something to keep an eye on, just from the standpoint of whether it's 2020 or thereafter. Be on the lookout for one of these two companies being quick to announce, we're no longer part of this deal.
You've got to wonder, what is in it for Shake Shack, because they are highlighting that as something which is certain to create uncertainty about the rest of the year's sales, same-store sales. And
which, by the way, they lowered guidance for that for the full fiscal year as well.
Right. So they're in part because they're just going to be delivering and selling less, because they're in a number of markets. I think Grubhub is very dominant in New York, but not so much in many other markets where Shake Shack needs to have its food delivered. And if people can't get it delivered through their preferred vendor, then they may just not be getting anything from Shake Shack, at the margins. I mean, it's bringing same-store sales down, I think, 1.5% or something is the guidance. I mean, there are fairly small increments that this is moving around by, but it is moving, as it always has, the stock much more than the business itself.